PayPal Holdings is an American multinational financial technology company operating an online payment system in the majority of countries that support online money transfers. It serves as an electronic alternative to traditional paper methods such as checks and money orders. PayPal has great global reach. It is available in more than 200 countries or regions and supports 25 currencies. It sends and receives payments easily over borders and language barriers. Here are PayPal's key statistics. PayPal generated $29.2 billion revenue in 2023, a 7.9% increase year on year. PayPal net profit increased by 75% in 2023 to $4.2 billion. 25 billion transactions were completed on PayPal in 2023, accounting for $1.52 trillion in transaction volume. 431 million users and merchants use PayPal. Let me introduce Alex Chris to you, the president and CEO of PayPal, who says we're driving significant transformation across our company and are committed to making the necessary changes to our business to drive profitable growth in the years ahead. 2024 is a year focused on execution to position PayPal for long-term success. Here is the financial summary of PayPal Q4 in 2023. Net revenues increased 9% on both a spot and foreign currency neutral basis to $8 billion. Transaction margin dollars of $2.7 billion flat on a year-over-year basis. GAAP operating income increased 39% to $1.7 billion. Non-GAAP operating income increased 11% to $1.9 billion. GAAP operating margin expanded 468 basis points to 21.5%. Non-GAAP operating margin expanded 39 basis points to 23.3%. GAAP earnings per share increased to 61% to $1.29. Non-GAAP earnings per share increased 19% to $1.48. Let's talk about income statement. Over the previous 5 years, PayPal's revenue has increased significantly, rising from $17.77 billion in 2019 to $29.77 billion in 2023. This equals to about 12.4% compound annual growth rate. Next, we have the operating income from $2.72 billion in 2019 to $5.03 billion in 2023. Operating income has increased. This translates to about 13.4% CAGR. And net income from $2.46 billion in 2019 to $4.25 billion in 2023. Net income has increased. This translates with about 12.3% CAGR. Lastly, in 2023, earnings per share increased to $3.85 from $2.07 in 2019. This amounts to a 12.2% compound annual growth rate. I'm gonna fill you in with the balance sheet now. Over the previous 5 years, PayPal's total assets have increased significantly, rising from $51.33 billion in 2019 to $82.17 billion in 2023. This equals to about 9.3 compound annual growth rate. Next, we have total liabilities from $34.40 billion in 2019 to $61.12 billion in 2023. Total liabilities have also increased gradually over the previous 5 years. This amounts to about 10.8% CAGR. Lastly, as of 2023, shareholder equity has increased from $16.93 billion to $21.05 billion. This translates into about 5.7% CAGR. Let's talk about key financial ratios now. PayPal's current ratio has decreased from 1.291 in 2021 to 1.222 in 2023. This suggests that the company's liquidity has slightly weakened over the past 2 years. PayPal's debt-to-equity ratio has increased from 0.4596 in 2021 to 0.5138 in 2023. This suggests that the company is relying more on debt to finance its operations. PayPal's net profit margin has constant from 14.26% in 2021 to 14.26% in 2023. This suggests that the company's profitability has remained relatively stable over the past 2 years. The financial statistics in table indicate that throughout the previous 2 years, PayPal's financial health may have marginally declined in certain areas. However, its profitability has remained stable. In conclusion, PayPal is a risky investment. There are pros and cons of everything. I'm going to talk about pros first, the positives. Revenue growth. Strong and consistent revenue growth over the past 5 years. CAGR of 12.4%. The asset growth. Significant increase in total assets over the past 5 years. CAGR of 9.3%. Lastly, market position. Leading player in the online payment industry with a large and growing user base. Let's talk about negatives now. Weakening liquidity. Decreasing current ratio suggests potential challenges in meeting short-term obligations. And increasing debt. Rising debt to equity ratio indicates growing reliance on debt financing, which can be risky.
If you would like us to research a stock, please tweet at Collective Rec or leave a comment here.
Like and subscribe for potential investment ideas. Become a member at www.collective-research.com.
Receive investment ideas before they are published.
Collective Research. Active fundamental research in global capital markets. Make informed decisions.